Good morning, good afternoon, good evening, wherever you are in the world, and welcome to another FS Club webinar. We are absolutely delighted this morning to be considering the subject of convenient untruths, the false narrative that offshore finance is a cause of widening equality in the UK. Sharing thoughts is Dr. Andy Sloan, who's the founder of the International Sustainability Institute.
Good day.
Now, we are very good day. I'm Hugh Morris. I'm a senior research partner at the Yen Group, and it's my job to get out of the way as fast as possible. But most importantly, I need to, and I'm delighted to thank our sponsors, without whom we would not be able to range as far and wide as we do in terms of the subjects that we can bring to the webinars. And our sponsors are hugely valuable to us. Today follows the standard route, me getting out of the way, Andy sharing his thoughts with us, and I can tell you it's a really interesting subject, and I will then moderate a question and answer session thereafter. So without further ado, it is my absolute pleasure to hand over to Andy.
Thank you very much. Polling questions, please. So how's this work? There's the drop-down box. Question 1. How are we looking in terms of answers? Let's have a look-see. Yes, very, very concerned. Okay. And I suppose we can go straight to the next question then, yeah, which is, we go to the next question, Sasha? Okay, four options for that one. If there's any typos in there, I guess I ought to apologise because I think I wrote some of these words. So people were very concerned about widening inequality. Let's see what their description is. Do we know what they're looking like at the moment? So, significantly, noticeably increased, only just under a third, not a cause for concern. I'm sorry, but nobody says it's marginal. So everyone believes it's changed and changed significantly by the majority, and we should be doing something about it. Okay, well, that's the backdrop for the presentation this morning. Thanks very much to Hugh. I'm Andy Sloan. I'm based in Guernsey in the Channel Islands, and I founded the International Sustainability Institute to further research and thoughts on the areas of fiscal and financial sustainability. Financial sustainability with a bit of a green head on. I do work in the sustainable finance field, but also you can appreciate working offshore, looking at some of the issues about fiscal sustainability, because I do believe that there's an awful lot of misinformation out there. And so this paper that was published at the back end of 2022 now is talking about convenient untruths and exploring global fiscal fallacies, specifically about widening inequality in the UK and offshore's role in it. So that was my introduction, but actually Piketty's original book, Capital in the 21st Century, and I forgot about the camera, that might be the wrong way around, but this book was published in 2014, 2013, and it basically has dominated policy thought for the last decade. And Piketty, along with his sidekick Gabriel Zucman, another French economist, or I should say French socialist, together they have literally taken hold of the agenda and pursued this sort of inequality narrative relentlessly, to the extent that you look at democratic policy in the US, you look at conservative policy in the UK, but if you look at European policy in the European Union, the Piketty-Zucman worldview dominates and prescribes policy solutions. Now, next slide, please, Sasha. I'm going to take you on a little journey today. I'm going to make 3 points. But basically, the premise is, and this is an old-fashioned trick, isn't it? You know, tell them what you're going to tell them. I'm going to basically explain to you that the concentration of income and wealth in the UK has been essentially unchanged over the last quarter of a century. And the offshore finance itself in that time period has actually shrunk in relative terms, And that basically exposes the narrative that offshore finance has been, a contributor to widening inequality in the UK. And that is a very, very simple premise. I'll take you through those 3 points in the next 15 to 20 minutes. Now, my worldview, or what I should say is the facts, go against the bien passant of what is current thinking. But hopefully, by the end of this, you might question that worldview that you brought to this presentation, because I asked you the questions, and 90% of you were really concerned about the widening inequality. And well, let's face it, I'm about to demonstrate to you that it hasn't really done much over the last 25 years. So first things first, let me explain to you why I think it's all gotten conflated. Next slide, please, Sasha. There are 2 lines here. And as you can see, those 2 lines don't paint the same story. One of them is actually indicative of wealth inequality in the UK over the last 25 years, and that's the blue line. And the next line, the red line, is the US experience. Now, if we go to the next slide, please, Sasha. One thing I will concede is that in the US, it has been an exceptionally different experience. We do tend to tie the UK and the US narrative together. They become intertwined. So whilst the UK and the US had both had what I call conservative revolutions at the end of the 70s and the early 80s, and the actual experience of what happened next has been very, very different. And as you see, in fact, in the US particularly, wealth inequality has changed markedly. And if you look at the share of the wealth of the top 1% of the US population, their share of wealth has increased by over 50% in that 25 years. Whereas at the UK, it's pretty much moved sideways. Now I say pretty much moved sideways because I'm an economist. I've seen the longer time series, which I'll show you later. So I know that was the end of a long downward trend, that blue side there. But you can see that the experience of the US, where the top 10 billionaires own the same amount of wealth as over 12% of the UK population. The wealth held in the US is quite extreme. And there are reasons for that that are particularly unique to the United States, that aren't replicated in the UK. For instance, if you look at the majority of the global billionaires, they're basically large shareholders in the families. The technology stocks, the Googles, the Amazon, that hasn't been replicated anywhere else. And once you appreciate that the vast majority of their wealth has been created by that amazing secular change in technology, in the whole sort of the internet explosion, it becomes more understandable how and why the experience of the US has taken place. And that's the US. But my contention is that US experience, that narrative that's relevant for the US, has been transported straight across to the rest of the world, and by Piketty quite deliberately so. But you only have to go back to sort of 2008, 2009, when sort of revered economists who I do respect, Joseph Schiller, who wrote Irrational Exuberance in the late 90s. There's a great documentary called The Flaw, which basically exposed Alan Greenspan's sort of explanation to Congress that there was a flaw in his worldview in explaining away the global financial crisis. But in that documentary, the evidence was pointed to the widening inequality that had been taking place in the US. And that narrative has been a policy conversation going forward over the last 10, 15 years. And it was a trend, as you see there in that red line, that just doesn't exist on this side of the pond. Now, having explained that, we move to the next slide, Sasha. Before I move on, I will point also to the sort of the first half of the 20th century. So the second half of the 20th century is very different from the UK and the US. And in the USA, in the first half of the 20th century, they also had widening levels of wealth inequality, whereas the UK experience was of one long secular trend downwards. Whereas what you had there, and if everyone remembers the Great Gatsby, you've got the widening wealth inequality of the 30s. So part of the contention is that a lot of this storyline is a US thing that just gets transposed to the rest of the world. So moving closely then, next slide please, Sasha. I've done this point to death, but I like to labour my points quite clearly. So this massive increase in wealth and income concentration over the last 30 years is a US phenomenon, and applying it to the rest of the world, and the UK in particular, is, I believe, a deliberate dissection, because it feeds a policy narrative, as we saw in the video. It feeds a policy prescription for higher taxes, for wealth taxes, for ignoring the actual underlying causes of weak growth, or the underlying causes of social problems. Blame it on widening inequality, job done, we'll all sleep soundly at night. So what I want to do now is then come back to the UK. So if I will make my next point, let's have a look. Next slide, please, Sasha. This is the experience of wealth shares of the richest 1% in the UK and the richest 10% over the last 100 years. And as you see, obviously there are data gaps there for the First and the Second World War. And I've taken this data, by the way, from inequality.org. I might as well take the data from the protagonists for this storyline. And inequality.org, as you appreciate, is a campaigning organisation to promote, obviously to campaigning against inequality. It's funded by the OECD. It's funded by the UK taxpayer. So it's a lobbying organisation for a particular worldview. But I thought I might as well take the data from them to sort of make the point. This is the data that they're using to make their case. And their own data doesn't actually justify the narrative. As you see, turn of the century, increasing size of the state, pensions introduced by the Liberals in the early 20th century, and the growing size of the state over the course of the 20th century, you will see the lowering share of wealth of the richest 1 and richest 10% as the basically public spending has increased. In fact, Sash, if you go to the next slide, I think hopefully this sort of more demonstrates that point. You have the trends on the left-hand side. This is wealth, and then as you can see, the blue line here, again, the world wars, skew the data, but you can see that upward rising trend up to the early 60s and 70s, and that was, broadly speaking, our conservative revolution over this side of the pond, where public spending, its inexorable growth, sort of stopped. And it has basically, whilst I appreciate that, the very recent narrative about the largest shares of the state over the last 3 or 4 years, post-pandemic, post-global financial crisis, but in broad terms, in the last 40, 50 years, the size of public spending in the UK has broadly stayed the same. And what's happened there, as you can see, is that taxation, or the share of wealth, or the impact of taxation on the richest has come to a halt. So that's been the experience. And as you see, and we're going to get into a little bit more detail now, over the last 25 years, there hasn't really been that much change. So if we move on to the next slide, Sasha. And here we go. This is wealth. The richest 1, the richest 10, and the poorest 50 over 25 years. And you look at it and you say, well, what's happened then? Broadly speaking, nothing. And as you see, the richest 10% and around 55% of the share of wealth in the UK, and you get the richest 1% at around just over 20%. Now, a digressive aside, but an additional point here is you see the poorest 50%, and this is wealth. My apologies, my daughter is sending me a request for an app. The poorest 50% have single digits share of wealth, and people will bemoan that situation. Now, so it's terrible in this day and age the poorest have so little. And it's like, well, yeah, it's all a relative story, and you've got really to understand a little bit of the facts behind that. When you consider from the vast majority of the population in terms of their financial wealth, usually it comes from their property or their pension. And if you take away those two, I'll be frank with you, they're mine too. You know, my pension and my property are the two biggest assets that I have. You take those away from me, and I don't have much left. And of course, if you appreciate that the poorest 50% in broadly terms will incorporate people that are living in social housing, broad terms, people that are going to be living on the state pension in retirement, they don't have those two assets. So they're unlikely ever to have a bigger share. And it's not to be heartless about the situation. It's just to make maybe make some sense check of some of these facts that are made that we all suddenly pull our hair out about and bemoan the state of the world for the vast majority of the population. Until people all own their own homes, or until people all have a private pension, this situation will be unchanged. And the fact is that most taxation and spending is to redistribute income to these people. It's unless you're talking about appropriating wealth and giving it to assets to people, it's not going to change going forward either. So there's a limit to how much wealth can be redistributed. You can make the rich poorer, but making the poor richer is a larger job. So we go to the next slide, please, then, Sasha. And so again, to make this laborious point again, here we go with income. And most people immediately will say, well, if you saw it juxtaposed, there's a slight jump there in the levels. And that's because income generally is more equally distributed by its nature. We all, I always like to sort of use the phrase, some of us have wealth, many of us have income, we all consume. But many people have income, even if they don't have wealth or financial assets. So you see the percentages there. And so the richest 1% now, in terms of earned income, have a lower proportion. There are some little interesting trends there, little bounces around. As you can see, the richest 10% sort of got wealthier after 1997 and up to about 2009. There was a slight trend upwards, which is interesting when you associate it with a Labour government. But you can quite clearly see there the impact of the global financial crisis on those, on that richest 10%. It took them a few years to come back, but under the sort of the Conservatives, under austerity, they didn't do any better than any other income group. So that, broadly speaking, and this data, by the way, like I said, I went to inequality.org. You can go to the ONS. And in fact, most of the research that you'll see will not be able to refute this. In fact, the Institute for Fiscal Studies published a report just weeks before I published this, but I had written about it publicly, so I could claim the IP for the storyline, as it were. And if you go to the Institute for Fiscal Studies in their report last year, they also present these same facts, but then they move on quickly and talk about other forms of inequality. We talk about intergenerational inequality, but the traditional wealth and assets and how it's distributed across the population, these are the actual facts. This is not in dispute. It is just that people like to airbrush these facts away and move on to more interesting parts of the narrative. Now, so move on then, Sasha. So that's it. I'm going to double underline my point. For 25 years, nothing's really happened. That's the facts. Doesn't matter what Piketty's Capital, Netflix, Amazon trailers say. Don't matter about the dramatic music. The facts are wealth and income broadly unchanged. Okay, so move on. In fact, this is a session for 1, 2, 3. You do move on to the next 3 slides quickly, or relatively quickly. We'll see this. Look, this is my dynamic example. Next slide. Next slide. There you go. Look, there's no, and that was my dynamic standing in front of a room, and I click at my clicker and I show people that's the big storyline that you've been sold. This sort of like wealth inequality is a big issue. 90% of you are concerned about it. They think it's grown and must do something about it. I was about 2/3, and it hasn't happened. But then again, moving on, we're nearly at the end of this. I am doing my deathly dull, hammering the same point presentation for a change. And the reason is, I'll digress here, is it matters to me because actually, while we're doing this sort of stuff here, while we're looking at inequality and what the causes of widening inequality, it's like if you're prescribing the wrong, if you're diagnosing the wrong problem, you're prescribing the wrong solution. That's why it bothers me. And actually, over the last 15, 20 years, the world has got a growth problem that is causing a massive, a massive feeling of becoming poorer, which is actually feeding into this. And there is a slide, I think Sasha mentioned it. I posted on LinkedIn 2-3 months back and show how real earnings is unchanged since 2007 for your typical worker in the UK. And that's the storyline. Unchanged income over 15 years. 15 years later, I feel bloody poorer. Inflation, I feel pretty poorer. But actually, if you point and try and look at that really difficult problem, it's hard. But it's much easier to sort of say, well, it's an inequality issue. And in fact, if we move on now, it's even easier to blame offshore. Next slide. So here we go. So now we blame offshore. So not only did Piketty publish this book called Capital, which is blaming, it made wealth inequality a real big issue. About 6 months later, his PhD student, Gabriel Zucman, if you've heard of it, unfortunately, this next book I've only got on Kindle because I lent my hard copy to somebody a few years back, and I can't believe I'm paying the guy twice to read his research. But he's got a book called The Hidden Wealth of Nations, which suddenly then made the whole wealth inequality an offshore problem. It doesn't matter that offshore, apparently offshore was the original, the culprits for the global financial crisis. The European Union introduced this new regulation called the IFMD to sort of put the offshore guys, under the caution out of business. And then offshore was blamed for the fiscal deficits after the financial crisis. And then offshore was blamed. Now offshore is blamed for widening inequality. You heard it in that video. The mirror guy basically sort of said, oh, where's taxation's a bit of an issue. And I remember watching the trailer during lockdown 2 years ago, or the first lockdown. And we come in, Guernsey comes in at 1 hour 40 minutes, and we're suddenly blamed for this big issue. It's a load of nonsense. Because even though 1.1%, the top 1.1%, 1.01% of wealth people hold 80% of offshore finance. That's true. Of course it is. It's like, why would you have stuff offshore if you weren't, weren't spending an awful lot of money having your wealth managed? But offshore itself has shrunk over that time period we're in review. So if you think through the deductive logic with me, so we've got the offshore is the contributor widening inequality in the UK. Well, first of all, there wasn't any widening inequality. And secondly, any contribution that offshore might have had will have shrunk in its scale over that time period because it's got smaller. So we'll go to the penultimate slide, or on to it, but 2 slide, please, Sasha, and I'll explain this away. So what Gabriel Zucman did with this hidden wealth of nations, he blamed offshore for, so basically it's all these offshore hiding all this wealth, which it wasn't hidden, by the way, but blamed it on that, and then the policy focus was all on offshore. And then what happens was he gets more data and publishes the same story, and publishes the same story, and publishes the same story. So the narrative, Google, go to the FT, and the FT will repeat. In fact, go to the World Economic Forum, and they will repeat Zucman's argument without any degree of critical analysis to see if it makes sense or checks. So offshore contributes to widening, and that's a present participle. The question is, how can it do that? If you look at the bottom left of the left-hand side of that slide there, you look at the scale of offshore wealth. Okay, so it does make a little bit of difference because those rich guys are, have all the offshore wealth. So it makes what, 1.5% difference to the richest 1%. It's a rounding error, quite frankly. And you look at it in 2021, it increases their share of wealth by what we're doing now, 1.1%. Okay, but that's gone down over that time period. So its positive contribution, or it can only have had a negative contribution to the issue. It cannot be helping widen if its impact is getting smaller. And if you see that the offshore as a proportion of global financial assets from 2010 to 2020, and my apologies here, it should say source. This is from Deloitte. They're one of the big four, one of their regular offshore surveys. And they demonstrate that the share of global financial assets over that time period, roughly half. So again, the offshore bogeyman is just non-existent. It doesn't sense check with this narrative. So finally, to the last slide, belong to the last slide, Sasha. On my point at this one, I'm going to make the same point again. But now what I'm going to do is I'm going to go to the OECD's own numbers. Now, the OECD publish the success of their tax transparency initiatives. And instead of actually saying, here's all the extra tax that's been raised by all these tax transparency initiatives, which is the subject of a different paper that is forthcoming from yours truly, because that actually hasn't happened. But if you look at the introduction of the Common Reporting Standard after the Americans introduced the protection of FATCA, the OECD published this data and they say, look how successful we've been with this Common Reporting System. Look at the amount of banking assets. Look how they've shrunk in the offshore world. You go, okay, yeah, you're absolutely right there. It's gone from 1.6 trillion to 0.95 trillion. So actually banking assets held offshore have shrunk in that time period. There hasn't been any corresponding increase in income or taxation through the CRS, despite the fact that it's got blanket coverage everywhere. But as you see, that share of banking assets offshore has shrunk in that time period, but yet the share of global finance, the size of financial assets have increased markedly in that. They're more than doubled in that time period. So again, just triangulating two different ways, Deloitte's numbers, the OECD's own numbers, and yes, offshore finance, its contribution has shrunk over that time period. So now to the final slide. And this is where I'll just witter on until you stop me. So I make that point. The point is that the concentration of income and wealth inequality has remained essentially unchanged for 25 years. And the offshore finance, because offshore finance has shrunk in that time period, it cannot have had a contribution to a widening inequality. A, there wasn't any widening inequality, and B, any contribution from offshore finance during that time period can only have got smaller. So therefore, to blame offshore finance for widening wealth inequality can only be a convenient untruth. That's it.
Andy, thank you very much indeed. Thank you very much indeed for a thought-provoking and indeed even provoking set of ideas to share with us. Much appreciated. Well, we have some great questions coming in from folks who have clearly responded to the exceptionally interesting material you shared. Peter Hall asks, the sudden decline in the share of the richest seems to have started in 1950 and ended in 1980, he's referring to one of your earlier slides, which are the dates when inflation started and stopped. Is this a coincidence, or could the real value of mortgage debt and gilts and owned by the rich have plummeted?
Gosh, that's a good question, Peter. Personally, I mean, that could be a causal factor going forward, but I mean, in terms of the correlation between, this is in the UK, of the wealth of the richest and levels of taxation, they moved hand in hand for that time period. And I know that maybe the low point, Peter, if you look at the charts, was the 70s. And then basically what arrested the downward trend was the Conservative Revolution. So the Thatcher reforms of the late 70s, and obviously Reagan's, let's say, to the early 80s, I should say, and the Reagan reforms and the US reforms of the early 70s, although they did come in, some of the reforms in the US came in under Carter, not Reagan, ironically. That clearly catalyzed a major change to my, to anecdotal evidence in the US, whereas in the UK, it just sort of brought an end to that trend, in my view. But I mean, in terms of the the specifics of each question. I can't. I'm not even going to pretend to be clever enough to answer the question off the top of my head.
Thank you very much. Question from Clive Bullen. I think you partly answered this. He asks, isn't the lack of change in wealth inequality in the UK due to wealthy people getting their money offshore or hiding it in other ways?
No, I mean, you see, the point is that there just hasn't been growth over the last 15, 20 years in the UK, so everyone just feels poorer. In fact, if you look at, and it's in the report, so I should have said, you go to the website, you can download the report, it's there, nice pretty blue and yellow one. The people that sort of, the poorest actually have seen their shares of income and wealth slightly rise over that time period, and the richest 10% have also slightly gained. And it's the middle 40%, oh, it's not the middle 40, it's from 10 to 50, and their shares have gone down slightly. And it's like, well, sorry, that's interesting, because if you just shave a little bit off each of those guys, they'll probably feel it actually. So not only have we had no growth, there's been a bit of a squeeze on that 10 to 50 percenters. And those are the guys that are basically creating the conventional wisdom, the bien passant, because they're engaged, they're concerned, they're probably political, they're more likely to be, and they've felt it. When you ask most people, you know, have you got richer over the last 15 years? You go, no, I haven't actually. Well, is it because of the wealth of the richest? Yeah, it must be. Well, no, it's just the conditions haven't been good for you. And in terms of the hiding it, so I was, and you appreciate the Tax Justice Network, groans all round if you know who they are, another well-funded lobby group who have been basically peddling tosh for a long period of time. When I say peddling tosh, they wrote a report in 2011, I think it was, claiming that €1 trillion were going AWOL for tax evasion. It was like, okay, that was your headline. What did you really say? You meant avoidance. What did you really say? Well, a lot of it was that. Either way, it was €1 in 7 was being, was it €1 in 7 economically was being lost to tax evasion. Of tax, you know, €1 in 7 of actual GDP. And you imagine how much that was as a share of tax. According to the report, it was something like 15% of taxation wasn't being, it blamed it all on offshore. But like, not true. It didn't matter. Everyone sort of repeated this nonsense, like everyone repeated the nonsense from Gabriel Zucman. He claimed in 2014 the hidden wealth of nations, that 200 billion worldwide was not being taxed. And okay, sounds a lot. Actually, not that much, to be honest. It sounds a lot. 200 billion not being taxed. Why did you get that figure then? Well, what it was, as I assumed that 90% of it was hidden. Well, why was it? Well, because I went to the European Savings Directive and the Swiss, and I assumed that everybody that was paying the retention tax was hiding their wealth. But they were paying the retention tax. So they were paying the tax on the wealth, surely. Oh no, I made a different assumption. Well, okay, well, I don't mean to be rude, but that was a big assumption there, that if you maybe make a slightly different one, you don't get to that 200 billion number. But to come to the point about the TGN and the hiding the wealth is, all wealth is, the CRS exists. You don't think really, you are always going to have the drug runners, the guys that are fighting an illegal war. I mean, I always say, show me a war that hasn't been financed recently with all the AML regulations in the world. There must have been a really violent place, because there's an awful lot of words going on as there is. But you try and hide wealth nowadays with a common reporting set. People will not do business with you. You know, jurisdictions such as Guernsey are populated by firms that take their reputation for probity and integrity very strongly. It's the currency of doing business, and they're prepared to take on an awful lot of cost to ensure all the transparency initiatives are met. And it doesn't make a blind bit of difference to the tax complainants. So there was a letter from the TGN to the King Charles just before his coronation, saying, by the way, Your Majesty, could you just get rid of all those offshore centres when you come to the throne? And I went on with the chief executive, Alex Cobban, on a BBC radio sort of not phone in, but a breakfast show. And I said, look, how are you working out that Guernsey is sort of like number 10 on the financial secrecy index. I sit on a couple of financial services boards. We have CRS, I've got the AML, I've got the beneficial ownership reporting, I've got, you name it, all this reporting that we do, and you've got us at number 10. How does that work then? And he goes, just because. Well, it doesn't matter what you do, then people have a populist narrative and they'll make it. And the worst thing is that while they're doing that, they're looking at the wrong problems, because growth has been the lack of it has been the bête noire of the last 20 years. I'll stop. Sorry.
Not at all. Thank you, Andy. Timothy Gosha makes an interesting point. He says the political crackdown on offshore financial centres is also widening global inequality by thwarting capital flows to the poorest countries. I run a fund manager for Nepal and other developing countries and see this firsthand. Is that consistent with your experience, Andy?
Sorry, you repeat that question.
With pleasure. Well, it's a bit of a statement, but so it says the political crackdown on offshore financial centres is also widening global equality by thwarting capital flows to the poorest countries. Timothy Gosha, I run a fund manager for Nepal and other developing countries and see this firsthand.
But I agree. I mean, I once there was I think it was a documentary done at the time of the Panama Papers, I think it was, and there's this guy in Cayman sort of explaining the rationale for, maybe Cayman one of the, this stick, and he was on a beach and he said, look, the reason why you have offshore centres, he said, you've got this Japanese company who wants to do trade with France, whatever, and which laws is it going to, do the contracts in, or, in the finance and the capital and the invoicing? Well, you just want a third country where you're going to do that bit and allow the capital to flow more freely. And he did it, and it was like, it makes complete sense. We were watching the documentary, absolutely. And to the point of the listener, that is entirely the point. Whilst, basically what we're doing is attacking the freedom of movement of capital. And unfortunately, nowadays, you hardly hear anyone defending the free flow of capital. In fact, you hardly hear anyone nowadays defending capitalism itself. Despite the fact, I went to an Ayn Rand lecture back in 3 or 4 years back, and the guy, you come across, not the Ayn Rand, it was the Adam Smith Institute, and the guy from the Ayn Rand Centre in the US had come to give the picture. He said, do you remember the 19th century? It's horrible, wasn't it? Kids up chimneys, soot, awful. We agreed, Jengers. Biggest increase in life expectancy and living standards that's ever happened to the human race, ever. But you don't associate that with that century, do you? Because the narrative is it was all rubbish, it was all terrible. And the problem is that in that populist narrative, you're throwing out the baby with the bathwater. People no longer defend capitalism, despite the fact that it's done great things for so many people for so long. And in fact, since the global financial crisis, it's almost like capitalism hasn't got any friends. And it's like, it might not be working, but it works best than anything else we tried. And the thing is, it's not working. Why isn't it? As opposed to the policy prescriptions that we get now. So yeah, to the guy's point, completely agree. It's basically an attack on the offshore, is attack on the free flow of capital, and it's attack on global growth.
Thank you. Well, I think we've time for one more question, and selfishly, I'm going to take that question. Given that you have eloquently articulated where you think the wrong targets are for the lack of feeling wealthier, and I think you may have hinted on this slightly, where would you direct people's attention to, Andy, to pick up on the right agenda?
And this is back in the day, 20 odd years ago, I was a councillor in the UK, and these are really, the right areas are really quite hard and dull and boring. In the long run, I say as an economist, growth is about improving productivity, it's about skills, it's about it's about making the economies more competitive. It gets harder with time because as we have the UK has a larger and larger service sector, the ability to create efficiencies within a service sector is harder. So your secular growth trend naturally gets smaller. But there's a long tail of people who could be better educated or better skilled, There's a huge amount of structural inefficiencies in public services. There's market inefficiencies everywhere, you know, and it's making the economy more efficient, more productive, and more competitive. And they're big structural storylines, which it's going to take years to solve. But we've spent 15 years ignoring them and just, I'll get on to my other favourites, using monetary policy to wash it all away and pretend nothing bad was happening. And it's all come home to roost now. There you go. That's my next.
Thank you so much, Andy. And thank you so much to the audience for your intelligent engagement and the questions that came through. In drawing this to a close, I would like once more to thank our sponsors who enable us to present this series of webinars. I very much enjoyed the participation of the audience. There are some forthcoming events, the 17th of July, Investing Together to End Grand Corruption, 19th of July, Strategy in Action, How to Own, Develop and Execute Your Strategy, 25th of July, Pretense, Why the UK Needs a Written Constitution. But thank you, Andy, very much indeed for some extremely interesting food for thought. And I wish everyone a tremendous rest of the day wherever you are in the world. Thank you all.
Thank you.